Hello and welcome to week number 47, starting by having a look at the VIX volatility index. And it's looking a bit spiky and topsy. There wasn't a lot of news to warrant a big spike higher. There was a little bit of worry about Europe lockdowns, but overall, as we are heading into a Thanksgiving week, and traditionally Thanksgiving week are bullish for stocks, I'm expecting VIX to come down. And that also means for S&P 500 and the Dow Jones to possibly catch a little bit of upside. I believe it will be a grind higher next week, so it won't be big spikes or huge dips to buy into. It will be just a gradual day by day, a little bit bullish and then a little bit more bullish as we close into the next week. There's one key date for next week, and that is Wednesday. We have a huge data drop. We have the RBNZ raising rates in the morning. In the afternoon we have United States PCE, and at nighttime we will have the Fed minutes. So there's a lot going on Wednesday, and that will also clear up a lot of how the noise will clear up all the noise around how price action will revolve after that. So we have a clearer play to do as we are heading towards the second part of next week. A couple of things I would like to point out is one is GBUSD. Last week I catched a long double position high. I had to close it out as things were starting to turn. Right now market is looking at the CFTC data. It's about shy of 3 billion short on pound. That can swing a lot more, so you can get a bit more aggressive where pound shorts keep adding, or if they start releasing their short positions and switch it around, we could see a big move higher. So these kind of zones is where I'm looking at to sort of gauge where the next move for pound will be. Naturally, Bank of England is about to raise rates either in December or February, so one would imagine you should find it a little bit more aggressively on the long side, but it doesn't seem to feed through in GBUSD. You're seeing that more in Euro GBP, where pound's been stronger against a weakening euro, especially now with lockdowns seeping to come across many countries in Europe. Another pair I like to look at is, because it will be one of the most volatile pairs next week, is NZDWE. Mistype that. So NZDWE. Again, on Wednesday we will have the Reserve Bank of New Zealand interest rate decision. Market is nearly pricing 50 basis point hike. It is more likely to see 25 and then followed by another 25, and as the hiking cycle continues. From that perspective, it is quite bullish for the Kiwi, as the RBNZ is starting that hiking cycle and it's not looking to stop. So really this should find a few levels higher. But it's one of the things that could hamper the whole trade is inflation expectations. If I were to bring up this chart here, so inflation expectations are starting to curve back down again, and if I had to compare this with NZDJPY, it really plays hand in hand. So that could mean that if possibly we see a spike and then want to sell into, it will be a lot more clearer once we approach Tuesday and Wednesday and how to trade it once those volatility pockets occur. There's not too much I want to get into this week, as next week will be more setting up for how we will trade in December. Mind you, usually the end of November and December there's not a lot of huge crazy movements. It's more of a grind, but in December we will have important central bank meeting of the Fed and the Bank of England, which will start creating really big movers, trending movers, which will carry us all the way to the end of January. So if you're sitting a little bit low next week and take it as it comes, in December we're going to have the larger swings that we'll need to express those trade ideas as well. I want to leave you with that. There's 6 weeks left of the year. Next week a little bit quiet, and after that we'll probably kick up more momentum as we're heading into January as well. And that's all I wanted to cover for today. Wishing you a profitable week. I will catch you on next Sunday again.